In this video, I will guide you how you can short in Binance future. So first of all, let's understand how shorting work in Binance future market. So shorting or short selling is when you sell an asset with the expectation that the price will decrease. In the context of Binance future, you would typically borrow funds to sell a future contract expecting that the price of the underlying asset to drop. Now, if the price does indeed drop, you can buy back the contract at the lower price, return the borrowed amount, and keep the difference as a profit. Now, this is what Binance Future Short means. Now, what are the benefits of shorting? Now, profit from the price decline. Shorting allows a trader to profit from the price decline, which is not possible in traditional spot trading. Now, second thing is risk management. Shorting can be excellent way to hedge against potential price drop in your existing holding. At the end, profit in bear markets. Short selling allows profit during crypto bear market, but it also comes up with the potential of risk. Now, the first risk is, let's say if the price of the asset increase instead of decreasing, you could face significant losses. The potential loss from a short position is theoretically unlimited as an asset price can rise indefinitely. Next thing is liquidation risk. If the market moves against your position significantly, your position could be liquidated, leading to a total loss of the funds that are used in that particular trade. So, hope this help. Before you go with the buy long or sell short, you need to make sure to have a complete knowledge of Binance future and how does it work. Otherwise, you're gonna face some great losses. So you need to keep that in mind. So that's the way of how you can short on Binance future.